Hey there, traders. This is Chris Keene from KeenPointOfView.com, and this is the weekend wrap. Let's take a look at what happened last week and try to figure out our game plan for next week. First off, last week was a very slow consolidating week where most of the majors sat in incredibly tight ranges, such as the Aussie and the Pound USD crosses. They rested in 50, 60, 70 pip ranges. Same with the New Zealand USD. And they failed to really produce any sort of breakout. The Aussie broke below trendline resistance on Thursday night, but could not create any momentum into the end of the week. And this leads us with, say, for example, like the euro sitting right at the top of trendline resistance, threatening to have a breakout. We have a lot of the correlation has broken down a bit at the moment, so we have a lot of pairs just kind of doing their own thing, and I would assume that it's probably extremely light volumes. The one big mover of last week was the yen once again, with there was more rhetoric out of Japan where they're trying to increase stimulus to weaken the yen and to try to make their economy break out of the slumber that it's been in for the last few months. The last few years or decades actually. Let's go ahead and take a look. Start off, and we'll take a look at the Euro USD. And I should mention that next week we have a lot of data coming out that could really increase the volatility and maybe break us out. If we have any breakthroughs on the physical cliff, obviously we could see a move higher or lower in the dollar, depending on what the outcome is. But we also have data that will start, and it starts next week with Australia, which has a release of its employment report, interest rate decision, I believe GDP, and then on Thursday we have the Bank of England and the European Central Bank announcing their interest rate decisions and probably any asset purchases or so forth along that line. And then on Friday we have non-farm payroll, so it's a big week and a lot of data, and hopefully we can get a bit more volatility in this new month. And it's the beginning of a new month. Let's start off and see how things are kicking off. To begin the week, we have the Euro USD, or end the week, ending right at the top of its range in the resistance zone between 130 and 130.20. But we can see that for the majority of the week, after breaking higher, the pair just basically breaking higher at the end of last week. It basically just consolidated in this range. It moved up to the top of the range in the beginning week, and then it moved all the way down to test the initial resistance level at 128.85 before bouncing back. It'll be interesting to see what we have happening on Monday. We don't have any real data coming out Monday, and I would expect trading to probably be slow on Monday and Tuesday again next week unless we have some sort of breakout. So I would expect the pair to probably remain in this range, and we'll make a push back down lower. But if we do happen to break out of the top side of the range, we could be on our way for a test of the 131.20 area in the short term, which would be the next level of support. So basically the level to watch heading into the week is this 130.20 level, and we'll just call that the bull bear line. A break below leads to push up to 131.20. If we stay below, we could end up going back down to 128.25. Now the Great Britain Pound USD, a little bit disappointing, the price action on this pair. You can see the pair just kind of whip, bing, 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 ping pong, chop, 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 up and down throughout the whole week between 160 and 160.50. It looked like on Wednesday we were going to get a break lower, and then we had some political jargon that pushed the pair back up. But you can see it did come down and test exactly to the pip, the ascending trend line that has contained the price action as of late. But what we have heading into the new week, we have a wedge basically forming here, and you can see that the pair is going to have to make a decision one way or the other. I don't know if we're going to have a lot of follow through on that decision, as you'll see in the Aussie coming up. It's going to have to either break above the 160.50 level, which will open up a path maybe up towards the 161, 168, 161.80, 162 resistance level, or we're going to break back down below. And if we break back down below, we could be on a clean path all the way back down. Well, actually, we're going to hit resistance right away at 159.66, but then we can have 159.10 would be the next level, which would be the 50 fib at 159. And I still believe this 50 fib is still coming into play because it was 50 fib from the rise. I think they started in the beginning of early August. But you can see, so we're just going to look for a break of this chop zone, and then we're going to let the price action tell us which way to play the cards. Now you can see the Aussie, on the other hand, broke below the this ascending trend line that had contained it ever since the beginning or the middle of November. On November 18th, and this rise up to the top of the channel, but it really didn't get any follow through. But it appeared to finish the week right here at resistance, similar to the euro, right at the top of resistance at 104.35. Now, as long as the pair remains below this 104.35 level, it does favor a move back lower down towards the 103.50 area in the short term. Of course, we'd have to break this 104 area, the low from last week, to see the momentum push us back down. But into the new week, we'll probably any move up higher towards this trend line is what you want to watch. If it breaks above this 104.55 area, breaks back in there, this negates this whole setup, and we could see another push up towards the 104.80, 105. Now, if the pair does happen to break up to the top side next week, there's a lot of resistance stacked right there. We have strong daily price at 105.20, and then we have this trend line that, if we look on a daily chart, it's a descending trend line that has capped the price action. For multiple months, I think going all the way back to last June, and you can see the pair has bounced off this level not once, twice, but 3 times. So any move up to there will be a significant level for the price to break through. A lot of stacked mumbo jumbo right there. So a move up to that level right there would be a difficult coin to break through, but if it does, could have a target up to 106.30, which you can see that has capped price actions one or twice. So the path higher has more resistance, where the path down to the downside is the path of least resistance. But we could just consolidate in this range now for another up until Tuesday, where the data begins to start flowing. But I would expect that we'll definitely get a little bit of movement here, because we will get clarity with those reports that are due out. Like I said, the Reserve Bank of Australia, I think, is on Tuesday, and I think it's GDP on Wednesday, and then on Thursday it's the employment report, something similar to that. Now, the New Zealand USD, on the other hand, also broke below its descending trend line earlier this week, but it hasn't really done that much. And you can see the pair rested most of the week on the 82 level, and then last night it broke through, or I guess in early trading in Europe, it broke through, but it couldn't follow any momentum, and now it's resting right at 82 to start the week. And this was the bull bear line. It's basically undecided. If once the pair wants to move lower to open the week up, we'll need to see a break of these lows, and that can open up a path down to the 81 level. But if the pair moves up and say it breaks above this, like 81.30, 82.34, we could easily see a push up to 82.70 and 83. This pair seems a little bit undecided and just wants to move sideways at the moment. Now, the CAD is a little bit more interesting, because similar to the Oz, it broke out of its channel, but it couldn't get any momentum going. The reason the pair broke out so strongly, it had moved higher at this, but they missed their GDP report, and they missed it hard. They missed it not just by a little. They missed it by 2 or 0.3%, and so this made the pair shoot all the way up to test the 99.50 level, which is really the price support we're watching, because the pair has been channeling between 99.50 and 99. But then it came back in, and you can see that it rested right on this one. Why are we looking at such a small chart? You can see that the pair rested, bounced right at the trend lines, the descending trend line. So what we're going to watch heading into the new week is see if we get a clear-cut break below this trend line, because that could easily mean that we're going to be heading back down to the 98.70. Or if we get a hold here and another push up to 99.50, we're going to look for a break to the top side, which then we'd hope for the parity in the 104.40 level. But right now, it's a really narrow range right here that we're going to see some bouncing in there, and we'll just play the price when the price tells us what it's going to do. Now, the yen, we all know by now, obviously broke up rather aggressively over the last few days, and then today, once again, there was talk about lowering the yen's value by additional quantitative easing infinity, and everybody. But then when you looked at, they were only offering about $12 billion of a new additional quantitative easing, and it used to be the second biggest economy in the world, the third biggest economy in the world. $12 billion isn't that much money, but they are getting a bang for their buck out of this rhetoric that they're spreading about a possibility of further easing in the future. So what we're going to watch here is that you have to be careful, though. They basically are avoiding, though, becoming a safe haven play in this uncertainty that's with physical cliff. But I think most people actually think that there will be a deal met, and don't want to trade every headline when we have a month ahead of the physical cliff. So what we're going to watch here, once again, is there's resistance up at 83.20. You can see it actually right here at 82.79. I guess there's 82.80. There's basically resistance there also. The highs for the week, and 81.85. What I'm looking for is a breakdown to 81.85. I would like to see, and a push down to 81 for a bounce higher. I don't know if I'm going to get that chance, that opportunity, but a move down to 81, that's significant resistance, and or 80.60, and you can see that in what's been to cap the price for quite some time. But the only way that would negate my hope for a move back down there, because it really is just hope, I have no idea if it will move back down there, is if they break above the 83.20 level, it looks like the pair would be off to the top side, and you could play for a move higher. I'm just going to look at 2 yen pairs, just interestingly enough, because I spoke about this in the wake-up call to keen traders, that the pair did move up once again last night, but tested the top of the resistance zone. We can see there's a zone between 107.50 and 107, and then down at 105.50 and 105. And you can see the price action has been ricocheting in this area lately. You can see that the pair moved up to test the top of this zone and trading today, but it couldn't carry any momentum. And if we can get another break out of the bottom of this zone, we could see it push stagnant lower. But if we look here, you can see this is the pair has been actually very respecting this zone very accurately. And it is interesting that the pair did turn exactly on this 1 hour 200-day moving average, but it was more than likely just to move out to the 105.50 level. So I would like to see it push down. I'd like to be able to see the pair bounded in this range for a while, because you can scalp it on either side. The Great Britain JPY, once again, they tried to break above significant support here at 132, let's basically say, but you can see it did reverse and finished right underneath the 132 level. So it'd be interesting to see if we can get a little momentum lower, if we can get a break of this 130.50 level. We could see a push back down to this 129.60 level. And I just want to point out the New Zealand JPY, because it has been range bound between 68 and 70, 68 and 67. You could just play the range there until it breaks. All right, everybody, good trading, good luck trading. Have a great weekend. And if you want to get access to the wake up call every morning and the keen insights, don't hesitate to sign up. The first week is free.